Dzień dobry Państwu.
Good afternoon, ladies and gentlemen. My name is Marcin Lauer. I represent the Investor Relations Office of Tauron Polska Energia. Welcome everyone to the meeting for the analysts and fund managers in conjunction with the publication of final full year results for 2012, which sums up the second year of our company being a publicly listed company. Traditionally, the CEO, Mr. Dariusz Lubera, and the CFO, Mr. Krzysztof Zawadzki, will conduct today's earnings report. Apart from discussing financial results of the year for the whole year, the management board will also summarize Q4 2012 in accordance with standards adopted. The presentation will be in Polish but simultaneously interpreted into English. Our meeting is being broadcast via the internet, and it's also possible to call in to the numbers that we distributed to you before the meeting. Of course, following the presentation, I'd like to invite you to ask questions, to conduct a discussion, both persons present in the room as well as persons that are listening to our meeting via a conference call or via the internet. Please, Mr. CEO. Good afternoon, ladies and gentlemen. Ladies and gentlemen, we'd like to present the results for Q4 and, first of all, the full year results for 2012, because we have just completed all the audits and the reports have been approved. Start with briefly to remind you, because it's not really new for you, but for this year, what we see, the key events, the summary of last year and the general meeting and the payout of the dividend, 543 million PLN, that's 0.31 PLN per share. That was the decision of the general meeting of shareholders with a bit of a different recommendation in accordance with the policy of the management board. An important event was also the signature of the agreement that increased the value of the bond issue program by 2.75 billion PLN, and a few words after that, beginning of July, the signature of the agreement, loan agreement with the European Investment Bank for 900 million PLN loan, and the funds to be used to co-finance the expansion of the distribution grid of Tauron distribution segment. Also a well-known thing, the conclusion of the agreement jointly with PGNiG, Polish Oil and Gas Company, and KGHM, PGE and Enea, related to the exploration and extraction of shale gas. And in September, the project was launched, the nuclear power plant-related project, jointly with the same partners, with the leading role being played by the project leader being the PGE. And finally, the commencement, physical commencement, following the prior resolution of a tender of the construction of gas-fired CHP-CCGT unit at Stalowa Wola, beginning of December. Also, at the end of the year, an agreement with PGNiG on the construction of a similar, same category, same class CCGT unit in Łagisza. And as we promised to you during our last meeting, following the presentation of the results for Q3, the beginning of January, we did present the launch of a new OPEX reduction program, efficiency improvement program for 2013-2015 timeframe, and this is 860 million worth of savings planned for that period. And an important but also not finalized event on January 24th, we ourselves, having reviewed all the bids, we announced the selection of a contractor, general contractor for the Jaworzno unit. Now, as you know, there are subsequent hearings are being held. 5 of them have been already held. The next one is 25th of March. In our opinion, this could be the final hearing with the final presentations of the participants of that process. But whether the office will take the decision on that day or will give itself a few more days, we don't know. These are our subjective internal opinions. But the 21st of March, the next hearing will be held. That's a certain thing. If we could come go briefly to the implementation of a CAPEX program here, apart from the fact that all these projects are being continued and implemented, of course, at a varying stage of implementation. The end of this first half of this year in Bielsko-Biała will be commissioning a cogeneration CHP unit, heat unit, 50 megawatt. A larger CCGT unit in Katowice. Now there is a procedure for the selection of the contractor. If we talk about cogeneration Tychy project, also we are at the stage of selecting the contractor, also a 50 megawatt cogeneration unit for the providing heat to the city of Tychy. We have completed, in fact, the construction of 3 fully biomass-fired units, and now all of them have already received the operation permits. The works are still underway, depending upon the given case. Startup work, some of the units are already fully operational in some of them, some other components are being added. But generally speaking, all these 3 units, one may say, have been completed from the point of view of CAPEX spending. Jaworzno, I just mentioned a few minutes ago. In accordance with the schedule, the upgrade works are underway in the Jaworzno and Łaziska units that are aimed at making them compliant with the new CO2 emission limits following 2018. There's no threat. All these units should be completed by 2016 at the latest, as a matter of fact. Blachownia CCGT unit joint project with KGHM and the SPV, special purpose vehicle, has been set up, and I think by the end of April we should have our own view of this investment project versus what has been happening around on the market in order to be able to take the final decision. If we talk about CAPEX, in accordance with what we already announced, it's not a big surprise that there's been an uptrend in the CAPEX. In 2011, it was 2.5 billion PLN. 2012, it was close to 3.5 billion. But please take note, and here I'd like also clearly emphasize that maybe we didn't emphasize it enough. Before, it's 1.7, almost 1.8 in distribution as of today. This level of CAPEX in the distribution will be in the following years at a similar or even higher level. So roughly 40% of all CAPEX of our group by 2020 will be allocated also to the distribution, which both in terms of new connections as well as upgrades of the grid. This is where the money will be allocated, will be used for. This year, the generation CAPEX similar to last year's generation, that's 857 million PLN this year. And quite a lot of CAPEX in the renewables 2012. You can see they're more visible this year for 2012. Now, briefly about key operating data as well as the financial results for Q4 and the full year. Mr. CFO, Mr. Zawadzki, good afternoon, ladies and gentlemen. Key operating data, that's how we did it before. Let's start with that. First of all, overall data related to the entire sector in accordance with the data for 2012 of Transmission System Operator, TSO 2012. We have observed a decline of generation of electricity by about 2%, a drop of demand on the domestic market about 0.6%. If we talk about the hard coal-fired generation, it was lower 7% year over year. The increase was observed in case of lignite-fired generation, 3.7%, and a strong growth in renewables, about 41% up. If we talk about our segments, a very strong growth in Q4 of hard coal output. Remember, in Q4 2011, we had quite a lot of problems with the pressure of underground waters, with the tectonic fault, and the output was not at the budgeted level, so therefore this 85% increase, and for the whole year, more than 21% of commercial coal output, more, almost 5.57 million tons. Generation of electricity in line with what I mentioned about the entire market. Last quarter, Q4, output 1.2% down, and over 10% for the whole year down. Renewables, we have, of course, for 2012, the entire output with including assets purchased in 2011, wind generation, namely the wind farm purchased from Vattenfall plus our own ones, increase in Q4 36.4%, and for the whole year 23%. And this growth was mainly the result of generation from wind farms, that was more than tenfold times, so almost 1,000%. If we talk about hydroelectric power plants, the output was 10% lower, mainly due to the hydrological conditions. You know that last year we had the hydrological drought, so the hydropower plants observed a decline in the output. Heat generation, both Q4 and for the whole year, the 2% growth. It was mainly due to the average lower temperature during the heating season in 2012. Distribution, very comparable, strong growth, stable growth, 25%, both in Q4 as well as for the whole 2012. You also remember that these assets in 2012 also included the distribution assets acquired from Vattenfall. Supply of electricity also, the supply, including the supply part purchased from Vattenfall, almost 31% for Q4, for the whole year 26% up. Number of customers increased by 1,129,000 customers year over year, so which means 28% increase versus 2011. Of course, a large part of that increase comes from the customers acquired along with the assets acquired from Vattenfall, the GZ. Financial results for Q4 2012, we talk about revenue, almost 17% up, more than 6.5 billion PLN. In Q4, EBITDA 11.5% up, 765 million PLN. You know very well that in Q4 we set up provisions or increased provisions for the employment benefits. If we excluded the provisions, that would be 877 million PLN. So the increase would be 29% up. I'd like to draw attention to a significant increase of contribution from the mining to EBITDA. It was negative last year, now it's 5%. A strong decrease of the generation contribution from 32% to 15%. Distribution, it's a continuous trend. EBITDA generated by distribution would continue to maintain at least until the large capacity in generation is commissioned. It will be at the level of 54%, and a strong growth of the contribution to EBITDA from the supply segment. Net profit a decline. Also, if you excluded the impact of the provision, this net profit would be about 291 million PLN, so we would have an 18% growth quarter over quarter. Similar in case of EBIT, we are showing here decline, but if you excluded the provisions, it would have gone up. So one-off events that impacted the Q4 results is the financial cost, more than 52 million PLN. Also, property rights write-offs, around 87 million, that also occurred in Q4. Also, Halemba, 14 million PLN assets sold, and also in Q4, an additional provision was set up for 12 million PLN due to the out-of-contract use of land. If you look at the entire 2012, revenue more than 19% up. The main three segments that contribute to this growth is mining, distribution, and supply. EBITDA up more than 25%, 3.840 million, also excluding the provisions impact. But these only the provisions are included here. We have a second part that reduced the income. 3,960 million PLN, a strong growth of the contribution of mining, distribution, as I mentioned before, above 50%, supply up to 12%, and a decline of the generation's contribution to about 20% to EBITDA. Net profit up to 21+%, close to 22% actually, 1,541,000,000. After the exclusions, 1.640. Earnings per share, now it's 0.84 PLN per share, up about 18%. Increase of minority shareholders is due to the profit generated by mining. You remember that the Compania Węglowa is a major partner by the shareholder in our mining subsidiary. EBIT about close to 31% up, 2.153. Also, following the exclusion of the provisions, it would have been 2.275 million PLN. The net profit was significantly affected by the financial costs due to the fact that our debt level is going up. But the first interest on loan drawn from EIB that weren't there in 2011. As far as corporate bonds, about 193 million PLN. I am talking about an increase of financial costs. Interest on the loans drawn from EIB, about 35 million PLN. The voluntary redundancy scheme, which is a part of our savings program, this is also the amount that in the last year, but it's about 71 million PLN in this year, in 2012. The bridge, starting with the margin, nothing has changed here. The biggest margin generated in the renewables, almost 70%. Distribution is very strong, about 32%, a very strong growth in the mining segment. If we talk about the changes per segment, the biggest growth rate we have, of course, in the mining, almost 160% year-over-year, and the distribution 49%, supply 98%, and customer service 98% and 77% in supply. Two segments observed a decline or a negative impact upon EBITDA for the current year, namely generation and the heat segment. The biggest contribution to EBITDA, of course, comes from distribution and the supply segment. What I'd like to draw attention to, although I mentioned last year we will not be talking about GCE assets, but since this is a very good impact that we are observing here, I'd like to highlight that. EBITDA reduced by the large impact coming from the provisions for the employee benefits were included in the net profit, 3,870,000,000. The share of a GCE asset that we incorporated, I'm talking about distribution, overall in this EBITDA is about 500 million PLN. After the reduction, the increase of our own assets will be about 10%. So I wanted just to highlight to you that the assets that we acquired from Vattenfall generated an EBITDA higher than we originally planned. So this is another confirmation of the fact that this acquisition was a good decision, good business decision. Coming back to individual segments, this significant increase in the mining segment was mainly the increase of the volume of the production, about 840,000 tons, an increase of the average selling price of coal, about 19 PLN per ton. As far as the negative factors that occurred in the generation segment, mainly the decline of the volume of generation and sales, about 2.3 terawatt hours, and the average decrease of the selling price, 6.8 PLN per megawatt hour, and an increase of the unit variable cost around 8 PLN. In the distribution, the main factors that impacted the strong growth was the increase of the volume and the increase of the average price of the distribution services. In case of supply, also increase of volume, 11.3 terawatt hours. We also have a part that we took over from Vattenfall included, increase of the average selling price by about 3 PLN per megawatt hour. If we talk about cash flow, operating cash flow, 3,520,000,000. It's an increase by about 60% versus 2011. Cash level, beginning of the period, 587, so increase about 76%. Of course, the biggest outflow is the spending related to CAPEX, To our investment projects, almost 3,300 million PLN. I think it's worth observing that the operating cash flow covers 100% the capex, the inflows that we got from loans and bonds more than 1 billion PLN was consumed by the repayment, 200 million, the dividend paid out, and the interest paid in total almost 1 billion PLN. The group's debt level, net debt, as you can see, went up by about 500 million at face value. However, we have an improvement of the leverage ratio, and end of this year, end of 2012, 1.18 net financial debt to EBITDA ratio. As remember, end of 2011, this ratio was 1.32. So our forecast that the leverage ratio end of December 2012 could be 1.5. It didn't prove right. This is mainly due to the delays related to the delays in the performance of the investment project. The main operating cash flows that improved 320 million. Outflows, dividend paid out, and taxes paid out. These are the elements that reduce, but increase actually the net financial debt end of 2012. Long-term contracts, the last year of long-term contracts, 2012, for our company. This year we expect only the final settlement, what will come in cash, 1/4 of the advance payment that is due for 2012. This is a part of a settlement of 2012 settlement and part of a settlement for the entire period of the long-term contract being in force. We estimate the settlement to be about 530 million PLN. For the entire period, the inflow 2,096 million, and that covers the entire period starting from 2008 until 2012. Is there a risk related to the final settlement? In my opinion, this risk may exist, but taking into account our history and the method, the approach adopted for the settlements of the last few years, this risk is minimum, in my opinion. Of course, it's the issue of 2008, which occurred in case of all utilities. So the questioning of the compensation, what was subject to the adjustment. Prime cost structure increased 16.5% year-over-year. Let me draw attention to one important element, which is quite important, I would say, namely the structure of prime costs have changed in favor of... Excuse me, I'm taking back what I just wanted to say, actually. 16.5% increase of prime costs. Structure, 46% variable cost part, 54% in 2011. In 2012, the structure has changed. 63 fixed costs, 37 variable costs. But it was mainly due to the fact that we had a lower output in generation. The use of consumption was much lower. That's why the structure has deteriorated in 2012. Talking about the improvement, I meant the increase of the share of fixed costs and the smaller share of variable costs in the subsequent years. As far as the structure of prime costs, the biggest share, similar as last year, consumption of energy and materials and outsourced services, 23%. If you look at the structure of costs year over year, it roughly is the same. In 2011 and 2012, you can observe that both outsourced services as well as the consumption of energy and materials constitute a similar share of prime costs, similar with respect to the cost of employee benefits, a similar share. Efficiency improvement programs for the first period, 2010-2012 time frame, actual savings 1.1 billion PLN. In 2012 itself, 467, so which is about 41% of the total savings of the voluntary redundancy scheme. 100% more than exceeded the budgeted. The number of persons that enrolled, more than 3,000 persons enrolled in the voluntary redundancy program, out of which 2,700 persons terminated the labor contract in 2012 or before. The next time frame, 2013-2015, which is supposed to generate minimum 867 million PLN of savings, is already underway. And the key expansion and growth direction, let me hand over to the CEO back. Ladies and gentlemen, we announced that, and we can confirm that, but if we talk about the update of the corporate strategy update, not any radical change or a new strategy or anything like that, please do not expect any surprises from our side. However, I mentioned that we are updating the strategy due to the announced renewables law. Since this is being put off a little bit and delayed, so most probably the first stage of the update of our strategy will come quite soon, but this will include mainly the incorporated GZ assets, because the current strategy did not include that, because they weren't there when we last time updated the strategy. The second update, when it comes, if there will be a significant change to the legal environment, especially with mainly the renewables law. We also mentioned the commencement of implementation of another efficiency improvement program, OPEX reduction program. This is not a surprise, an increase of capex both in distribution and in generation. And similar as in previous years, we still have ability to acquire funds on preferential terms from EIB for investment projects, issue of bonds on the domestic market, which may happen this year, we can't exclude that, and the preparation possibly to go to the Eurobond market, but we don't expect that to happen this year. However, we will try to acquire the second rating to be better prepared for the Eurobonds market in the subsequent years, and of course, wherever it's possible, acquiring funds on preferential terms from environment protection funds and from the EU funds. And we are not showing here, but it's obvious we will be interested in being involved in the Polish investment project, improvement of capitalization of BGK and PRI, Polish pro-growth investment. We can see an additional source that came to existence, and we would like to be involved in that program as well, and take advantage both of the possibility to draw financing, using the financing, debt financing from BGK and equity from the PRI project, PRI entity. And we have projects that we want to put on the table in those enterprises. You have extra materials in your handouts. You can look at the slides, additional information, but now we are at your service, at your disposal. So let's move on to the Q&A session. Person that will be asking questions, please ask questions to the microphone for the need of a transmission. Also, I'd like to invite the web users and persons that were listening to the presentation, please send via email to the address that you have available in the form, in the web broadcast form. Please go ahead. Who's the first to ask a question? Good afternoon, Paweł Puchalski, BZWBK. One question. The current pricing trends for electricity, haven't they that impacted your decision on Jaworzno? Yes, of course they have not impacted the current trends. If we were to take into account the fact that the prices in 2012 since June started declining, and we have knowledge on 2013 is already available, but the first volumes for 2014, you can see that. But in the time frame that we are looking at, where we want to have efficient profitability of that project, 2018, that's the commissioning, the year of commissioning this unit, but full operation is 2019, 20 and forward. Of course, we adjusted our projections. However, they didn't get adjusted that much to have that units being not effective anymore from the point of view of our investment into this construction. Yes, please. Good afternoon, Piotr Dzięciołowski, Credit Suisse. I wanted to ask you what are your valuations today, the pricing today, in order to maintain the book values of the power plants? Do you expect new forward price curves, especially in the context of the fact that PGE wrote off Dolna Odra to zero, wrote down? And where's the difference in your bookkeeping assumptions relative versus 160 PLN price of electricity today on the market? That's the first thing. The second thing, we can see a slide on which you are showing all your CapEx projects, and we've seen it for 2 years now. I wanted to ask how much money all these CapEx projects generate, how much money they generate in 2015, except for Jaworzno 3, and how the expected contribution has changed, because this is the money spent already, committed CapEx already. Have you thought about the contribution of all those CapEx projects? So we had some view of that 2 years ago, 1 year ago, and today. What's your view today? How much they will contribute? How much money they will contribute? Let me start with at least the impairment, especially what our competition says and what we say. The basic difference from a bookkeeping point of view is as follows. Let me put it this way. I will not answer you because I don't know the assumptions of PGE. I can say what's my view, but the first basic difference is such in the assumption of the entire model for testing the value of fixed assets. It is due to the fact probably that PGE has the so-called center generating financial assets split into specific power plants. In our case, we don't have it. We have the entire generation, so we don't have the building blocks. Łazisko, Jaworzno, Blachownia. I'm not looking at it this way. We made such an exercise. It was before we adopted the policy, accounting policies. It turned out that the breakdown of cost per unit gave us more confusion than if we looked at the entire segment. I know that the margin is not very big, so maybe the conditions keep worsening even more and more. We might do the same as PGE. We are testing fixed assets every year, so the current impairment test will come at the review of the report for the first half of this year, and we'll come back to the subject. For now, the testing that we done, the tests were performed end of this year, we didn't see the loss of value. But difficult for me to relate to what were the components in PGE, because if it's Dolna Odra, then probably they took into account the current production and the future production, the future output. So testing was more focused on this specific unit. But in our case, we have the following situation. Of course, you can say that we have more efficient and less efficient units, and the more efficient ones are subsidizing the entire segment, so that we don't do tests per unit. Possibly it is true, but we don't know that because I don't do the tests per unit. I do it per entire segment. I would lie, however, if I were to say that today's market environment gives us a lot of comfort and then mean that the margin of this recoverable value versus book value of the assets is very big. It's not big. That's true. And the second question, let me put it this way. It's very complicated, actually. Today, to tell you the truth, I would be happy to have a good memory. I could give you broken down per unit, what units, what are the cash flows in 2015. I will not be able to answer that question. I can give you the answer in the case of those projects that are shown here. In case where the implementation is underway, the corporate decisions have been made, corporate approvals, and the CapEx has been sent today, the probability rate is above the weighted average cost of capital. In case of some units, the decision might still take place. I was talking about Blachownia, for instance, with respect to which we don't have the final technology selected, whether it's going to be a single large unit, 2 units, or the second unit will be postponed over time, delayed. So it's under review. We have permits for connection to the grid and supply, the power supply connection, but final decision is not there. Katowice, we are talking, we are in the terms of reference stage. This is the heat, including heat. It's a similar calculation as in case of Stała Wola. Wind farms, today we could discuss a lot. The current prices of certificates, green certificates and the black certificates mean that these investment projects are possibly I don't want to say risky, but maybe today in the current circumstances we don't have good results. The decision whether to scratch right off investment projects that we started, we didn't take the decision on buying new ones. We just continue with ones that we commenced. I believe in that because, in my opinion, the market, this oversupply of certificates, is artificially created due to the market behaviors. We don't have the obligation fulfilled. What was happening on the market in stopping the co-firing, we also stopped that. I believe that the market after 6-9 months will recover because this surplus will be consumed. Please note that we have two technologies, co-firing and full firing. We stopped co-firing. We're generating using the 100% fired biomass-fired units. These are new units. They just were put into operation. The story is completely different back here, but I assume that if the market doesn't adjust itself in terms of certificate prices, then the change of supply by the co-firing of a supply of the certificates due to the co-firing will help the situation in case of by the fully biomass-fired units certificates. Talking about the CapEx projects, let me just assure you that Tauron Group will definitely build a gas-fired unit in Blachownia that we mentioned. The one that would have to be following the completion will not be able to put in operation. So possibly you have a benchmark versus the E.ON's decision of a newly completed 850 megawatt unit. This is the issue of talks to the TSO prior to the implementation of the project. This will be the key decision if the 150 megawatt unit E.ON in Germany, it was told that it will be operational 1,000 hours per year. It will be only used for the intervention purposes due to the wind generation because they have 13.5 thousand megawatts. They have more wind farm, but only photovoltaics they have 13.5 megawatt. 1,000 per 24 hour into the system, so definitely will not use this unit for in this role 1,000 hours unless the price covers the full year cost. So please be sure that definitely ourselves or KGHM, who is our partners, will not take the decision. The issue, ladies and gentlemen, overall question related to renewables. Today we have a situation with the green certificates because not even to mention the red ones, there's nothing to talk about there, but we face, in our opinion, a similar situation case of yellow certificates if no decisions are taken. In the free pack draft, the current one, there's a provision that gives a delegation to the Ministry of Economy to intervene on the market of substitution fees once the price drops below 75%. They may increase the size of the obligation. That's the draft provision. Whether it's going to find itself the same shape in the final law, we don't know. But everyone has seen what this oversupply is dependent upon, and apart from the intervention purchases, but there is no institution that could perform it except for the National Fund, which today doesn't even have a legal basis or statutory basis to do it. So this is the unknown. So today we are not opening the new projects, we are not buying new wind farms. Only today we are penetrating the market, looking at the market and looking from the point of view of the future investment project in terms of wind farm, because we know that the quantity is limited because of the ability by the system to absorb wind-generated unit. I have two additional questions, if I may. If you could give me more information about the cash flow profile in generation for the next 3 years, midterm, let's say, prospect, and say maybe broken down into the first 50 better units and the first 50 of worse units, the 50% of worse units in strictly looking from the cash flow at the fixed costs and CapEx terms. It would be very interesting if you could give this type of information. Second thing, in the context of the updated strategy, if you could say whether you continue to consider getting involved in the shale gas and nuclear power projects, because with your balance today and with this, I think there's no financial potential of your company. And the third question, finally, since President Kilian had a meeting on nuclear energy recently that was reported by the press. Why you, as being an entity of a nuclear power consortium, you're not involved in those discussions? Maybe you are, maybe you are. So I'd like to get your comment whether the nuclear project is going outside of your area of interest. Let's start with the first question. I will not also give you a detailed answer here, but you don't have to be a big philosopher to say that in terms of the next 3 years and the surplus that can be generated by the generation, looking 14, 15, 16 time frame, if you look at capex, mainly in Jaworzno, you do definitely get a negative cash flow. That's true. I have no such data to show you off the top of my head what will be the cash flow. We are our policy, but we don't give guidance for the subsequent years. Of course, it's very interesting. Maybe it's a subject for another meeting. I think when we announce the full year results, talking in very much detail on that is not a good place. That's the first comment. Let me just add, talking about generation. We already mentioned that. We continue raising that because we have taken formal activities, so we have submitted to the appropriate institutions responsible for energy security, to the TSO, to the Ministry of State Treasury, which is responsible for the critical infrastructure. According to the law and the regulator, we are saying that, talking about the package of 820 megawatt units, all our 120 megawatt units, we are talking about the decommissioning them or withdrawing them even this year, if no specific activities, system activities are taken that would enable to cover the fixed cost of operating those units once they are parked as the so-called intervention reserve that we expect by the TSO to announce in the near future. There is a tender for this type of capacity, and we want to dedicate to this tender 6 units, and 2 of them we want to decommission, unless there is a separate mechanism introduced to cover the so-called cold backup generally in the Polish system. Of course, we do not intend to perform the generation art only for the sake of generation art, but it has to be business justified. So if you look at the generation this time frame, but definitely without Jaworzno would have been much better, and it's difficult for us today to give you a freer projection for the entire generation to present to you. But this type of activities have formally been undertaken. We have passed resolutions in the Tauron generation segment. We have submitted them to the appropriate institutions, and the TSO already knows that, the regulator knows that very well. And we're now waiting for the feedback. Coming Monday at the Ministry of Economy, a meeting will be held on including in the model of arriving at the tariff fee, the cold backup. If it doesn't happen, we will be decommissioning those units even this year. But the ones that the operator will qualify, they are saying they need them for 2016, 2018 time frame, then the issue is to cover the cost of the operation 2014, 2016, and this model would also be used for this purpose. We have not 50 units, we have 29 units. I will not give you Discover America, Happy. You know it, unless you want to hear it from us. You know what's the unit variable cost of generation in units, hard coal-fired units. In our case, this is on average 130 plus PLN. If you add to that CO2 full price, whatever you assume to be, the emission level have to be 0.9, 0.8 in case of Łagisza. The average would be 0.9. A simple calculation, very simple calculation. So you know what the reference price is. We're not talking about 2013, we just contracted at different price levels. You're talking about in the contract in the subsequent years, and we would exclude the forced switch-offs, and they cover the variable cost. If we simplify this calculation, so if we were to sell electricity at 160 plus per annum, we'll have very few units that would be profitable at that level. But probably with a lot of certainty, or 100% certainty, I know, but all hard coal-fired units have a similar profile as ours. Paweł Pawlowski, one more question I have, because I'd like to outline if we talk about the loss of value of assets, because of course the forward curve projections are important. Also, the discount rate is very important, the weighted average cost of capital. PGE, based on what they published in the annual report, in the full year results, PGE is applying 0.84, and you're applying post-tax, and 0.8, which means 6.4 post-tax. So my question, whether you maybe you applied the calculation of the loss of value of assets using a very low discount rate. Maybe to rephrase it, have you performed tests? What would be the impact of a change of the discount rate on the loss of value? Of course, we tested the sensitivity analysis with additionality versus discount rate. The discount rate that the auditor adopts and the company applies is within a certain range. The PGE's auditors, similar to ours, evaluated the discount rate, evaluated the impact, the components of the impact. WACC looked at betas, the yields of long-term bonds that have impact that looked at the benchmark, comparable benchmark. The decision of the management board in case of PGE, we also did do that. The question will be today whether reduction by 1% of discount rate. I will not give you that because the sensitivity is there. I don't have calculations along here. That's not really the point. I think the point is that it's not only the forward price curve, not only the discount rate, but also the plan. These are very important sensitive elements in case of testing, such tests. Assuming a miracle happens and in 2014 the prices would go up to 200, the Dolna Odra would have been invited to the system, so then PGE would do the reverse move. The 1.4 billion, they do the reverse impairment write-off, impairment charge. The Dolna Odra is restored into life, let's say. You must be aware of that. But of course, we don't have knowledge today how Dolna Odra was in the system. Looking at what the DSO says, only it was under forced regime, then definitely it operated for much less time than our units that we had in the system. Let me put it the following way. It's a matter of judgment, it's a judgment call, a subjective call by the auditor. In both cases, the auditor was not at discomfort, didn't make a qualification. They considered those tests to be correct. To what degree this is part of the company's strategy and to what extent an absolutely accepted decision by the auditor, I don't know that. I don't even want to talk about it. It's difficult for me to refer to our competitive company. Please also don't look at it. If someone did it, it was the right decision. If the situation is reversed next year, they will show totally different results because the situation may happen, but this impairment write-off will be reversed. It's not a thing that cannot be reversed. I can assume that the company that would like to have a lower potential for the payout of a dividend can do the impairment charge to reduce the result. Also, you can also make this assumption looking at that. I don't know. I'm just saying what was the driver for the decision. It's also part of the strategy, I would say. Okay, so can I find out what was the discount rate applied by Tauron average for all assets, generation assets, above 8%? Pre-tax. So above 6.4, 8.20 something I can. Thank you very much. If I may, we have a number of questions from web users. Mr. Piotr Bartek, PST, is asking for confirmation of our dividend policy if we talk about the dividend payout level. Another question is related to the expected decline of electricity prices. What level of decline does the management board expect this year? The third question, whether we are hedging generation at the current wholesale prices for 2014. Let me briefly answer the dividend question. In the report, we haven't yet presented the recommendation of the management board. Let me just say that there is some activities and calculations are being performed. I can just say that definitely there will be a recommendation on the dividend. We want in line with the dividend policy that we presented in the very beginning. So let me remind you, this is 30% of the dividend payout rate for each period. However, today also we are looking at our investment needs, and also we take into account the fact the dividend last year was paid out of more than 50% level. So all these factors will take into account. We'll soon present the recommendations first to the supervisory board, and once it comes from the company, the report will be published in the near future. There will definitely be a recommendation, I can assure you of that, but at what level I cannot give you the answer today because I don't know myself yet. If we talk about the wholesale prices, we estimate this decline to be year-over-year for generation about 3.3%. 3.3% decline, roughly, year-over-year. 2013, we're talking about the year that's closed, that's been contracted since 2012 from the very first months, and it was done until December, and even the volume, 15-20%, is still being contracted. These are the monthly, weekly contracts. We're talking about the average price year-over-year. Talking about 2014, we haven't contracted generation yet. Under yearly contracts, we are contracting the sales portfolio, for which the supply portfolio, and we are buying electricity from the market. Every supply portfolio is being matched by the electricity purchased on the market. We have a few more questions. Investor is asking about the Blachownia and Stalowa Wola projects. Please confirm that these projects as joint venture projects, that there will not have a significant impact upon the debt level, but we will be just posting our participation in CapEx. Let me put it this way. Stalowa Wola, of course, yes, today it's being consolidated according to the equity price. No one has control of that company, neither PGNiG nor us. So, of course, the debt of that SPV does not affect the balance sheet of any company. But what will happen in case of Blachownia is difficult for me to say at this point in time, because how it will be consolidated, whether it will be a decision that none of the shareholders has control over it, will be due based on the business model and the contracts signed for the offload of the electricity. And the assumption is for the company not to be on the balance sheet, not to affect the balance sheet. But let me put it this way, but starting from January 1st, 2013, a new international reporting standards change, and they define the control rights differently. There's a regulation, there's a provision that can be applied starting from 2013, but this is a regulation that, at least if I understand correctly, the idea of this provision is to tighten the system, leading to a situation where there is no company that has a controlling stake will be limited to minimum. So in the majority of cases, always someone will have to have a control. So always someone will have to have it on the balance sheet. Only in special cases, the given joint project, investment project, can be treated as an entity that none of the partners has full control over it. So in case of Blachownia, I cannot give you a definite answer, but the idea is not to have it on the balance sheet. Another question related to the EBITDA for 2014, taking into account the fact that to a large degree electricity prices have been hedged, and a request to give more detailed answer on the hedging of electricity prices. Frankly speaking, I don't quite understand. First, you mentioned EBITDA and hedging. These are two issues. One is applicable to EBITDA for 2013, and the other one is the hedging of prices. One thing I can say, everyone knows, all of you know, that EBITDA in 2013 will be lower than 2012. This is not any major discovery, because a large part of long-term contracts is off, 500 million, which cannot really be made up for under the business model, especially by 2014. What the focus is that the output will decline and the demand will decline. I hope this is a transition period, 2014, and some recovery is expected. So EBITDA 2013, you shouldn't expect it to be at the level of 2012 EBITDA. But let me put this way, we will discuss with the CEO and the management board following the results of Q1. Once we know the actual results for the first 3 months, we'll be able to present to you something like a picture for the 2014. We'll have more confidence in but I would be more conservative today talking about the results of 2013. I have one more question. Maybe I'm obsessed with your cash flow, but if you generate 20 PLN clean dark spread, 20 tera, that's 400 million in cash you're making. You have 6,000 people, that's 600 million in costs, and you have some 300, maybe 400 million capex, opex maintenance. So the business sustainable generates 500 million loss. Do you have any idea, apart from subsidies from free of charge CO2 or biomass co-firing, to have that business not generate such big losses, or maybe this power market that will generate 500 million into the company to have a business cash neutral position for your business? Maybe I'm wrong, I'm off on some numbers, but this balance is well underwater. But not referring to your calculations, but the CEO already answered this. 2 units submitted for decommissioning in December in this year, 4 submitted for intervention reserve. If we don't agree on the reserve, being them including the reserves, we will take the decisions to switch off, withdraw the units that are inefficient, that generate negative cash flow. The OPEX reduction, the program has been underway for 3 years. If you look at the number of people that took advantage of this voluntary redundancy scheme in the generation segment, you have quite a large number. Let's put it this way, wherever we are able to tighten the screw in terms of OPEX reduction, minimizing fixed costs, we are doing that. But of course, I don't know where you got 6,000 from, employment figure, because we are approaching 4,000, below 4,000. In mining, you have something close to 6,000. If I may, Tomasz Buchowski, Deutsche Bank. Let me ask about your exposure to green certificates. You know, you're a large seller of electricity, so a buyer of green certificates. At the time when you sell electricity, did you hedge the price of green certificates, or do you have some open position that we are talking about the obligation for 2013, correct? We are hedged. Yes, we are hedged, fully hedged. And 2014, the colors are not fully hedged yet, the color certificates. Thank you very much. Any more questions? If not, so I'd like to invite you to discussions behind the scenes and to the next meeting in May, during which the management board will present the earnings report for Q1 2013. Traditionally, daily you have access to the Investor Relations office. Please send all questions to us. We will definitely try to answer them. Thank you very much for now, and see you next time. Thank you very much. Goodbye.